Hello, welcome everybody to another episode of Arthur's Roundtable. Totally grateful for everybody who's paying attention and share it and all that business. And so we super appreciate it. And thank you for listening in. Karl, we have a guest today. Karl and I have actually known each other right before COVID when we did a conference at the UN for our impact friends, which was, you know, it ended up being a good conference, not because I did it, but because it was full of really interesting family offices. And we had people speaking about, rather than getting up on the stage and talking about how the world's going to come to the end, they came up and said, here's our construct, here's our business, here's how we can demonstrate we had impact, and they could prove it. And so it was a little different than most things that people come up and say the world's going to come to the end and get off the stage and have no solution. So Karl and I had a chance to speak prior to that. And so I'm glad to see him come back and participate in the podcast with us. And you're going to find this out, but one of the things of note is that before we had a compute crisis and an energy crisis and a power crisis, he's got a method of addressing that problem. You're going to hear about it today. Is that fair, Karl?
Yes, absolutely. No, thank you for having me. And yeah, there's plenty of problems we can identify to try and solve. So yeah, no, but thanks for having me. Just by way of background,
Yeah,
I've
let's start
worked
at the beginning a little bit if you don't mind.
Sure, yeah. No, totally. So, basically this energy crisis has been started some time back. It started actually, we started thinking about this grid constraint stuff back in like 2018, 2019. So I've been in finance my whole life, been a banker, run a hedge fund, run a broker dealer, run a reinsurance company. So I've been sort of an entrepreneur in the financial services space. And then my last fund was really looking at the energy transition. And, in Norway was principally where we were investing, Norway in the Nordic region. And as we saw, and they were kind of leaders in the energy transition because they're an oil country by background. Domestically, 98% of their domestic power is hydro. And then whether you're right or left in the government didn't really matter. They went all in on this, electrification idea. So much so that now 70% of cars on the road are EVs. So, as you can imagine, though, in a small country like that, with that much power floating around, that much demand, it started causing a lot of strain on the grid. And a lot of people had started getting into battery trading early on, or high frequency trading, which is really just, uh, just like markets, there's volatility on a grid, and so people, sort of started taking advantage of that. But we took a step back. So my fund, we launched in about 2020, and we started following this, and we're like, every single problem we're having in terms of energy, distributed energy, and that was the main investment thesis was in distributed energy. It keeps bottlenecking at the grid, and so it eventually dawned on me that if you think about energy markets, there's really two main markets: oil and gas, and it's a competitive market, and then you get to the grid with electricity, and it's kind of a monopoly. And so, all these energy assets that we're creating and whatever, they all end up bottlenecking at the market of the
Distribution,
grid,
right? Yeah.
in distribution. And the problem with that is like, so something like solar, a technology that's been around for 30 plus years, that's gotten super cheap, almost around 3 cents a kilowatt hour, still looks unprofitable to people. So, like in the state of New York, if I sell solar back to the grid, I'm getting 6 cents a kilowatt hour. Well, that doesn't look like much. And I keep going to the federal government, lobbying, blah, blah, blah. In Norway, we decided, well, what else can we do with this energy? Maybe it's the offtake that's the problem. And I think that was the key unlock was like, well, how else do we sell or use this energy for something else? And so we started testing it on like charging stations, for example. You had a lot of cars there, pretty consistent, but that wasn't like enough. We're like, where is the next big off taker going to come from? And so this was about in 2023. And over the horizons, we see ChatGTP coming over. And we're like, actually, they're going to demand a ton of power. And so as we started really looking into the grid and, the addition of these hyperscalers to get onto the grid, I mean, even still, like in New York, I can just explain, we already knew that there would be grid capacity constraints by 2029. With hyperscalers, it's moved to the end of this year. So we
Yeah.
knew that the grid issue was going to be a problem and that decentralized energy was a solution to this. So we had written the patents basically on all distributed energy as it relates to powering GPUs, TPUs, DPUs, and 16 other processing cards. This was kind of the solution that we marry distributed energy assets to what we now call edge scale data centers as opposed to a hyperscale data center. But for people who don't understand the grid, I could take a step back because it took me a while to really understand grid dynamics. I mean, these things were built in 1960s and they were meant for people with 2 TVs and 6 lamps. And transmission, central generation meant to go out, and then some industrial uses. But this was really the ratepayer. The industrial payer was just an end user, and that was it. And then you sort of flash forward into sort of the renewable market, and you have people then participating bi-directionally. And so there's something called inertia. It stays, has to stay at like 60 hertz, the grid. And so when you're adding more power on, it can disrupt the wave sign of the grid. Now let's add in hyperscale data centers. So a hyperscale data center is basically like adding the whole city of New York onto the grid and then turning the lights on and off all at the same time in milliseconds. Like at your house, you have a power surge, lights go out, you have to go to the basement, flip the switch, and it trips the circuit breaker, etc. Same thing can happen in a city. But there's much more damage that can happen when you have, all of a sudden you cause these massive waves and surges.
Formers and that sort of thing.
Those can blow.
And
You have damage.
is the inertia, I'm sorry to interrupt, but there was uh, some sort of limitation. Like if you wanted to put a Tesla roof on and you had 10 batteries or three or whatever the number was, the utility would limit how many batteries uh, that you could get for some reason. I don't know what that reason was. Does that have to do with the inertia that they didn't want to buy back that much because of the influx and the inertia, or was it something else?
Well, actually, they want more batteries on the grid. It could have just been that they have too much. It could have had some element of that because you do slow inertia sometimes, but batteries don't do that. But just solar does that. It may have just been, who knows? They have a lot of things that go into why they have certain
Yeah,
measurements on and
fair
off.
enough. Yeah.
But the batteries are useful to the grid in the sense that then the utility grid operator can draw on power when needed. And this is actually part of a strategy that some of the companies we invested in before in the fund were all about. A company called TGN Energy. They do high frequency trading. They actually stand idle, and people can the utility grid operator can draw on that power if needed. So that helps flatten the wave sign of the grid. So, so yeah, it's really that AI is testing not so much the capacity, although there is a capacity constraint to it, but it's testing really the architecture of the grid. And so, this is just the beginning. Like AI, so there's 24-month lead times with AWS. And we were just at GTC, met Jensen Wang, finally, which was cool, leather jacket and all. But, it wasn't about chip lead times. It wasn't, I mean, there's been a lot of talk about, VRAM and, memory chip cost pricing and this sort of stuff. But the real problem was power and trying to find additional power. Right now, there's just not enough power from the grid to be able to build out all these hyperscale data centers. And so, where are they going to go? So, most of the hyperscalers have gone bigger. They've tried to fire up, 3 Mile Island. I think Microsoft is going to get that deal. They're buying up gas turbines. They're building bigger. We said that's kind of the wrong approach. There's two dynamics here that we can fuse together to solve this problem. And it's basically all these people haven't been making money off their solar. So, that's a big problem. And then the lead time to get the power off the grid, it's just not going to be there. So what we came up with was something called edge scale data centers. Instead of hyperscale, we're edge scale. And that's defined by 20 megawatts and below, specifically 20 megawatts because there's moratoriums now in the state of New York. Maine has declared one where you can't build hyperscale. So, and they're taking off so much power at the expense of ratepayers. Obviously, costs are going way up. So, what we do is we then marry all of the distributed assets, which are either stranded or just not making enough money. And we basically put like an edge scale data center at someone's physical house location or their business location. So, in the case of a home, These things are like the size of a desktop computer. We were partners with Dell. You just order it, comes to your house, plug it into the wall, connect to high speed internet. And that's actually part of our decentralized network. Or if you're a business, let's say it's a Lowe's or Home Depot or whatever, 5 megawatts of rooftop solar, you can fit about a megawatt of servers in your site location. So you co-locate it. Then through dark fiber or whatever, you also connect to our cloud. So our cloud is a totally decentralized cloud, but now we can build where the power is. Turns out it's cheaper. Instead of sending electrons through a distribution channel like the grid, we actually just send the data through fiber, and you eliminate all those transportation costs. So now solar, which is 3 cents a kilowatt hour, is making between $1 to $52 an hour versus 6 cents a kilowatt hour. Or in the state of California, you even you get curtailed like 40% of the time. So all this net metering stuff, all this where you were promised you'd make all this money, even in California, that's all going away. So we're linking together those two things, and we give 80% of our revenue to the energy host, or what we call an energy host. So Electra is ultimately two businesses. It helps these energy hosts, homeowners, and the like, and then we have our cloud business, which feeds the energy hosts. So the cloud company then offers GPU rentals, inference, fine tuning, et cetera. They then pay us and then ultimately the energy hosts, and they get 80% of the revenue. So to give you another metric, a gigawatt of power from a utility, they make about $80,000 per gigawatt. If you convert that to compute, you're going to make anywhere between 750 million to $1 billion on that same gigawatt. So 80% of that goes back
Huge.
to
That's a
it's huge.
huge delta.
So that's what I was saying. The dislocation of power, the arbitrage between power and the demand for compute is enormous. So that's has to do with the inefficiency of both the grid and then the need for power from the compute side. So we're kind of, in many ways, we're sort of disrupting the energy market in the sense that we're almost like the shared economy we're allowing any merchant of power to enter into the power markets. So kind of like an Uber was to taxis, or Airbnb was to hotels and apartments. We're doing that with energy and offering a third way for people to make money.
So the building blocks, just to tactically think about this, is I'm a company, I'm Home Depot. I've got the solar panels. I've already did the CapEx for that. I'm using as much as I can. I can't sell it back to the utility because they don't want it or whatever, right? Then where do you plug into that?
So we take like a server, we install it at Home Depot and maybe their server room or utility closet, whatever. And then the extra energy that's coming from that building or from that solar runs the processes of the GPUs at the site location. So it's
For
literally like
for a different customer.
for Electra's cloud. So think about it like this. You take a hyperscale data center, break it up, you have the racks. You
Yeah.
break it up into its parts. And instead of having one power source, now we're taking like smaller pieces of the hyperscale data center and we're putting it at where the power is. So the power is just running it locally. It's like a big computer at your house,
Yeah.
just a bunch of, and then you're connected through fiber, and that fiber connects you to our electric cloud platform. And so what's different, what we do we're different than any other cloud in the world, is that when you go to Electric Cloud, you have a prompt bar, just like ChatGPT. So you type in like pandas in space or something. I can even share my screen and show you, but I don't know if we're set up for that. But basically, you type in pandas in space, you'll get some images, and you pay for those images. But beneath that, you get these different bars, and that's the different power sources that are coming in. So it'll be like 4 different GPUs from 4 different site locations that rendered those images. And then it tells you the fuel type. So it'll say solar and batteries, hydro. It'll give you the type of fuel you just used. And we've trademarked this called carbon free compute. In real time, that it's green. So we put a logo on it, and then you're certified carbon free. So it answers that question too of, is AI environmentally sound? Well, now you can make a bunch of AI slop on our platform environmentally free. So carbon
So
free.
give me an example. You don't have to tell me who it is, but somebody needs compute and they'll just tap into your cloud when they need it.
Well, they
And you,
just yeah, our interface is just like any other cloud, like
yeah,
ChatGPT.
yeah,
From the user point of view, you don't know where any of this is other than you see the different bars are working. Now in the future, um, you know, what is unique about us is we're actually going hyper edge scale, meaning right now, okay, AWS has 130 site locations globally. And so they actually, Google also has a bunch of locations. Google owns Waymo, for example. And so they have a hyperscaler that deals with Waymo in, let's say, San Francisco. But Waymo, what they actually need is for low latency to run the network better is servers within San Francisco. So Lectra can literally have, because we have a partnership with Sunrun, we could have 20,000 servers just in San Francisco networking with all those Waymos. Hedge fund managers, they're doing high frequency trading. So we can locate servers much closer instead of having their GPUs have to run at some hyperscale location. So these are some of the markets we serve. For media and entertainment, we're working with the movie industry on carbon-free movies, like their CGI and their VFX or whatever, so we can make them carbon-free. But the reason why we're building in this way as well is because in edge scale, number one, it's good for fine-tuning and inference where the market's actually headed. But when you think about this, like, so that the grid, think about that it's already constrained for AI. Now you're going to add in robotics, automation, advanced manufacturing, all of these markets. Where are you going to get the power from? Like I've asked this to a lot of people, Department of Energy, Department of War, like I've been down Pentagon, asked these people like, okay, so, because in 2021, ERCOT, the Texas grid almost went down completely in 2021. It was 4 minutes from complete failure. And I don't know how many people know that, but yeah, but so, okay, that's one thing, an attack or like some sort of catastrophic event. But marginally, when the grid is at capacity, what are we building? What's the response? Zero. No one has, the national labs, EARPA, all the government. I figured someone would have an architecture. Nothing.
Hmm.
Silicon Valley,
That's a little troubling.
it's working. Yeah,
Yeah.
super troubling.
So do you have capacity? In other words, if your cloud is working and it's on demand for Waymo or whatever it is there enough power for you to from whoever's given it to you to satisfy that need?
Oh yeah, we have like, say, the thing about our platform is then there's unlimited power, an unlimited power base to do this from. Let me see if I can actually do this.
You should be able to. I don't know
Can I
if we
share?
flip that switch, but you should be able to.
Let's see. Do presentation. You're still there?
I'm still here. I don't see it, but
So
I
I
really
can't
have,
share.
yeah, actually
Maybe I
don't
can
know how to do that
Oh, there we
here.
go. One sec.
Oh, share down here. Yeah.
Okay.
Good.
So now you're seeing this is Lectures Cloud. So you come here and let's say you want to generate images. So that's what I was saying. It's like, okay, we'll do pandas in space. So you can run like 600 different models or plus on our platform. So I'm a developer. I come to Lectures Web as a space. Dream Shaper is just a fun thing to model. Now down here, these are the different servers that executed on this job. This server, our partners, I'll just tell you, is in Wisconsin. G4, this one's in Sulphur Springs, Texas. So these different servers executed this job. And so, what we're embedding is that these fuel types, this is all solar, by the way, and I know it is. So the UX will eventually say that. Then you can actually click in and it tells you how much wattage was used and the time it took. Then you can click into each one of those servers and you can see the historic power at that site location. And then if in the future, if I was like, oh, I'm Waymo and I need just servers in San Diego, we have a map so you could just cluster the servers you need in a location, and those servers would help you work on that site location. So this is no one else in the world has this. This is like cloud of the future, and then it's infinitely expandable for power. So anyone, the energy host, and I'll just show you a quick thing on our presentation. It's also easier. Let's see this. So this is the design of this is the business model. So basically, you have for a home, you'd have a smaller server, and then like for businesses, you'd have like a larger server, and then those feed up to the cloud, and then you have cloud customers, just like I was doing there, who work on the cloud, and then the money flows down to the energy hosts, and so you can have an infinite amount of energy folks supplying power to our cloud. And our cloud, our cloud doesn't have to be the cloud either. We can run an API to other clouds, AWS
Mhm.
or whomever. So we're really just AI infrastructure being built out over time. So,
So, Carl, this is like totally unknown, right? Meaning, I'm sure you've done some work to socialize what you're doing,
yeah,
but when you type the prompt in, was using the compute to get a result, but it's not an LLM on its own. It's just compute,
right. So the most of the market that's what I showed you was inference. Like so
right?
people who already have a model, have trained models or whatever, and are doing that. I would think training is still better on a hyperscale data center. You can train on a network, but it might be slower than you would get from a clustered effect. But whatever. So McKinsey is like 70-80% of the market is going to inference. Once you've built the models, they're out there, you know? So where we also shine then is we've partnered with Dell in this way, and I'm speaking at Dell World actually next week, or following week. Businesses have not adopted AI as fast because they don't want to give over their data to Meta or OpenAI. So what we can actually help them do is then we take the server, it goes to like KPMG or something. They can do all their analysis with an open source LLM that's already been made. They can do all their data crunching. Then during the idle time, we can use it for our cloud. And so it'll pay KPMG money in the interim. So it can finance their server outside of the cloud. So it's actually enabling businesses to then localize their data, localize their energy, kind of helps them be more resilient. Also, I think like for resilience anyways, I think edge scale is important because I actually am part of something called Business Executives for National Security. And I know this guy, Timothy Ray, General Timothy Ray, and he's a 5-star general, ran CENTCOM for years. And I had breakfast with him. This was like a month and a half ago or whatever. And I was like, hey, man, hyperscalers, they're kind of, I know they say AI is going to take over planet Earth or it's going to take over the world, but not if you bomb the data center. They don't grow
Right.
back. This is a huge cap. And he's like, well, that's true. 2 weeks later, Iran sends bombs to the UAE and bombed 2 hyperscale data centers,
Yeah,
disrupting
is that
banking,
crazy?
disrupting.
Yeah,
So,
crazy.
like, you think about the architecture of what we're trying to do here, and we're building hyperscale, which is critical infrastructure, on top of critical infrastructure, the grid, which has a ton of metaware, super vulnerabilities. It's like, what are we doing? So I think edge scale, even from a business resilience redundancy point of view, is a smart way to go. You can also build these things to hide. You can build decoys. You can build, into the hole in the wall into a cave. I mean, whatever you want to do. No one will get lock on where it is. Oh, rethinking capabilities. And then if you think about a third world or even second world, like think about we're working with a team, CMI in energy in Guatemala. They don't have a grid system to even put in a hyperscaler, right? So then so what do
This
they
is
do?
the natural solution anyway.
Yeah. So there's a lot of reasons why you should build, in edge scale. I'm not just pitching this from like because I'm have a self interest in it. I'm just thinking about engineering, the architecture of it, and where I'm actually headed with this ultimately is building sort of a grid 1.5 to 2.0. The grid for capacity needs to be able to expand. Now, grid 2.0, just to define these, grid 1.0 is centralized grid system. We all know that. Grid 2.0 would be a decentralized grid system, meaning it's totally decentralized, power's coming from all different places, etc. But grid 1.5 is the connective tissue between the two. And what I mean by that is you have batteries on the grid that can decide whether or not they use the excess storage for the grid operator so they can balance the grid, or whether
Or
it's used
storm.
for compute to generate revenue. And then it can also act as a switch for DERs or distributed energy resources. So it's storing and acting as like a buffer between those two things. And then ultimately, grid 2.0 is there as it's growing. You can start building microgrids, and this is where the LLMs do come in. We're writing energy LLMs to forecast where we actually need to build power, microgrids, et cetera, as resilience, redundancy, and profit from things like compute through robotics automation, through all this other stuff, all these other markets that are supposed to come. We are building out that grid. So just like fiber optics had to with the internet, very similar architecture.
So, to be very pedestrian about it, I've got a solar roof. I've got excess power. Maybe I don't. If I'm selling it back, I'm paying for my electric in my house. I'm selling it back to the grid. Everything's cool. I'm making some money. So it's a push, right? And I'm making a little bit of money. Is your solution a better solution to put the box here and make more money?
Yeah. At the end of the day, yeah. I mean, it's an alternative to selling back to the grid. Ultimately, we're just a competitive market to the current grid. If you wanted to keep it very simple.
And what's the I know it's a new company and all that business, but is the CapEx to buy the box 2 years to pay it back, 3 years to pay it back? What's that look
Yeah,
like?
I mean, I can share my screen again if you want.
Yeah.
So just to give you an idea.
And of course, at scale, Home Depot would be a different, you know, calculation, right?
Yeah, so these are like the unit economics, for example.
Yeah.
So this is like basically NVIDIA chips. So when we call it Home Edge versus Business Edge, Home Edge is really a 5090 card that goes into your what looks like a desktop computer. And so, but with Dell, you can do zero money down, you can lease, you could do, whatever. And then this is roughly the cost, the payback period, monthly revenue, the fiber costs, the internet costs, the energy costs. So we kind of price all of that in. And then that's your return. But this is like on the very low end. What we're doing is just pricing GPU wholesale pricing. What it doesn't include is actually as we build more product onto our cloud, think like Google has YouTube that sits on their cloud and they make tons of revenue from YouTube, for example. So we would share that revenue with our energy hosts. So as we build more edge products, as we build more things, the energy host payback period gets faster and faster.
So, one of the things, as I understand it, and I could be wrong, is that the biggest problem with the LLMs and the data centers is that they need consistent power. And when there's a surge, they have to turn on the gas turbines and pay more per hour than they otherwise would. And so it's just a cost of power. And they're still only charging you $20 a month or whatever you're paying for your LLM, but they have to, their profit margins are consumed simply because they have to pay more to deliver you a consistent power. Is this a solution for that as well?
Yes, I mean it's well for hyperscalers it is quite a bit different. I mean they have to have like massive backup reserves. They also their draw changes so fast, and so quick, and they have to a lot of things with hyperscalers. They also have to overbuild for capacity, so they can't utilize actually all the GPUs they install in general. I think they get 65 to 70% utilization, sometimes less, because they don't want to build it so the internet goes out. I mean, we haven't had an outage in a long time with internet, unless it's like a disruption in the cables or something, but like never because the uh, hyperscale data center is fully utilized, 100% utilized. Similar to the grid, there's 40% margin on the grid. And I think, for the hyperscaler, they'll swap energy sources just to maintain consistent power or also not to fry the circuitry of the GPUs themselves. They use different battery layers to help slow down the frequency that would kind of fry the all the switches and all the internal server equipment. So they actually have a whole bunch of buffers and those alternative energy sources to protect against that. But for us, I mean, it's just slightly different. I mean, we have what we call an orchestration layer, and you saw a little bit of it in when I showed you our cloud. So those four different layers, like if a power site goes down, in our case, we just don't use that GPU at that site location. So let's
Yeah,
say
you just switch it out.
we just switch. Yeah, the orchestration layer sends jobs to different places, and then that's it.
So where are you now? You're selling the boxes, you're selling to companies, you know,
Yeah, so we just built. Actually, we're launching our first mothership, what we call a mothership, in New Jersey. Probably in
oh,
the
I saw
18.
something about that. Yeah.
Yeah, so I've posted in some pictures and probably have a party and stuff. So we sell these to what we call energy hosts to the market, and then we build motherships in different places. So that one's in Kearney, New Jersey. It's like 3 miles from New York. So eventually we'll have a bunch of satellites around here, and that will serve the New York metropolitan area and Newark. So we can coordinate Waymos, and we can do all that sort of good stuff. But then we're building in Texas, California, and Colorado these motherships to network with the satellites that we have there. And that'll just, the reason mostly why we're doing it is, well, we get 100% of the revenue, which is, also good to stabilize our business. But primarily it's to keep,
A company store, right?
but it's also to keep 100% uptime to our developers. So I can't, in an SLA agreement with them, I have to be able to guarantee 3 nines or 5 nines. And in order to do that, I have to have my own, I want to be able to do that to guarantee their uptime. So, because satellites, especially homes, we are what we call community cloud. And then like more like a Home Depot, we can actually build it to an actual data center spec, which is SOC 2 Type 2 compliant. So it's more secure for the developers. They're likely less likely to go down because they have more infrastructure, et cetera. But a home could be, a cleaning lady could just unplug the computer.
Right, right.
All right, we're down. So yeah, so for resilience purposes, we're building our own infrastructure. But it's an insane IRR. I mean, so even with just Carney, we're revenue positive as a business day one. And then as we're building, each one of our motherships generates about 10 to 15 million of revenue. And so it's just, our next job then is just build, build, build. I'm building, raising another 20 million bucks to do these, 4 different site locations. And then I'm setting up Electra infrastructure, which will basically build out, 50 of these. I'll raise about 200 million in equity, 600 million in debt. And then fingers crossed, the Department of Energy would give us about $1 billion to then really massively scale things out. So we're starting to talk about bigger numbers here, almost $2 billion. And then you realize the whole industry is spending 750 billion this year. And we're like, okay, it's a crazy market, but here's why we're competitive. It takes us 2 to 3 months to build a site. It takes hyperscalers right now because they lack power, 24 months. So our speed to market is really fast. We actually even have cloud companies coming to us saying, can you build out at your power site location? So that's great. I mean, I think business will be great for us over the next 2, 3 years.
So what's the moat? Is it your patent?
Well, yeah. Yeah. I mean, and I have more that are coming, but basically the core patent, the distributed energy powering GPUs, TPUs, DPUs, 16 other processing cards. No one was thinking about this. I mean, I wrote those in 2023 and got granted in 2024 because we knew grid constraints were coming. We didn't know that AI was going to be like this crazy,
Crazy.
but we knew that we needed to lock it down. So yeah, that's a moat. And you see some other companies now trying to get in on the edge compute. Even NVIDIA is like, they've gone with a company like Span, or they're working with like Comcast to think about how can we get chips out to the edge and utilize the grid a little differently. But they're still optimizing for grid 1.0. They have not made the leap off of to distributed energy. And to me, that's insane, because how do you expand our grid? I've looked at how the government would do it, like a government spend on trying to build more wires, and it's impossible. Even the lead times on, sort of the transformers that are required for substations, whatever, the lead times are 6 to 8 years.
Yeah.
So you
Yeah, I
couldn't
heard
build
that.
fast enough. Yeah,
Yeah.
you couldn't build
Yeah,
fast.
there was a guy that did a documentary called Grid Down that we had on the program
Yeah,
almost 2 years
David
ago.
Tice.
Yeah, David Tice, yeah.
Yeah,
Yeah,
love that guy.
and it's scary. I mean, we all knew it was scary, but
But yeah, you
I
won't
mean,
sleep if you spend any time with David Tice.
no, no, that's
I
right.
went, by the way, I went to the premiere of that movie. I met Dennis
No,
Quaid. I went,
Dennis Quaid, yeah.
yeah, skinnier than I thought he'd be. But yeah, I mean, the threats to the grid are material, but those are like, those are real. But I also think about it in terms of like, how would grid 1.0 fail just on its own without an attack, without these outside black swan events, whatever? When is the marginal cost of the production and capacity burnout? Where's that line? And so that's actually, I've been doing a bunch of tests trying to figure that part out. And then, because like, we're entrepreneurs, we don't want to, we want to identify problems, but we also want to have an idea of how to solve them.
Totally, yeah,
And
yeah.
that's where you can create the data center as a flexible load to the grid. We're actually in an RFI with Con Edison right now in Zone J. So batteries are the key, I think, to stabilizing grid 1.0 and creating storage, whatever. But a lot of the returns are like 8 to 10%. So infrastructure guys are like, man,
Not
it's
very interesting, yeah.
yeah. So, but when you pair it with our data center, with an edge scale data center, returns get up to like 25, 30%. So that pencil. So what we're trying to do, at least in the state of New York, is attach some compute revenue to these batteries. And then we can put in things like flow batteries. Like, we're working on a project with TerraFlow, uh, vanadium batteries, long duration flow batteries, 10 to 12 hour, long-term duration type battery. So, environmentally friendly. It's more of a super capacitor. Those are the types of innovations that I think need to happen in also this sort of grid 1.5 period. How do we then expand the capacity of the grid, and start then working in sort of the TERs into the model? So yeah, and we're actually building some software called Electric Connect, which is a platform that then allows anyone with any energy assets to connect to it to then use that energy for an offtake of any type. So then it's like compute is the first step. But then yeah, as you move through time, it's automation, it's manufacturing, we did an experiment actually over Christmas. It was really funny. We took the power at my head of clouds home location, and then it was about $1.50. We had a 3D printer, about a buck 50 per material to build snowball launchers. And then we sold them to the kids for like 20 bucks. So that was like a pretty decent margin, but it started getting us to think like, okay, so for supply chain and 3D printing, anyone with any energy capacity and manufacturing could actually produce these materials and sell them at location for plumbers, for fittings, for all these different use cases. And you get rid of
Very,
all that supply chain.
yeah.
So once you disrupt the energy market and move energy to where production is, it's really interesting what you can start doing. So yeah,
So what's the play for somebody that has an interest in deploying capital first and second, sees what's happening? I haven't seen the details, but there's pushbacks on all these big data centers, right?
tremendous.
Whatever you the regulatory pushback, consumer pushback, whatever it is, right? Political pushback. Aside from like you don't need anybody to invest in your mothership because you don't want them to, I imagine, because it's pure profit for you. But investing in the company, an expression of that?
Yeah, yeah. So, I mean, so far the capital we've raised has been from the industry. Like EG4 is a battery maker. We've had family offices, but a lot of them come from like the solar business or from, so we've been really authentic too. We've turned away some VC capital, which was from like firms that are not aligned with this mission because we would have been a division of them. It's a Fortune 500 oil and gas company, by the way. So we're like, no, not that I don't even mind oil and gas. It's just that I don't want to lose control of where we're trying to go. No, we are raising money from equity owners for Electra. We're just launching a $20 million note here in the near term to anyone who's interested. But then it turns really much into an infrastructure play with the mothership. So it'd be like infra investors, asset backed lender types, that sort of investor, I think would get more interested. And then with those revenues, we'll probably go for an A round sometime in 2027. And then we could do a really competitive price round with VCs and with, different. And I'm going to target corporate VCs because like Comcast Ventures, because they have distribution through telcos, the Constellation Ventures, different distribution channels. So that's the idea. I like corporate venture companies because they're a little bit more roll up their sleeves, get into the business, and they want to not just profit from you, they want to actually distribute for you and figure out a reasonable
Yeah, they business
royalty.
development.
And they give you new ideas on product ideas. So yeah, so we're gonna run that probably. The $20 million note we're starting now and probably hopefully finish it before the end of summer. Um, but yeah.
So what could go wrong if Jensen comes out with a new chip that doesn't consume so much power? Look, I don't understand all that stuff, so I don't even know if that's possible or would it matter. What else could go wrong for you, for your company?
Uh all sorts of things, I guess, probably. Execution risk, I think that's probably our biggest risk. No, I would say the primary risk, honestly, is like when you're building edge scale. The only other people who've built edge scale is a company called Akamai, and maybe you guys have heard of Akamai, but
Remember Akamai? Yeah, they were
yeah,
around for a long time. Yep.
yeah. So they have about 4,000 site locations already, but they're not powered by distributed energy, and some are co-located with hyperscale data centers. But so they have to run a distributed network. Now for us, we're running. Okay, so like I said, AWS is 130,000 site locations. Our deal with Sunrun, we could get to 1 million homes. That's a lot of places, And so the initial sale, great, fine. What happens in 3 years if the things break down? Am I going to get 1 million phone calls from, 1 million unhappy customers? And then what are the costs of replacing those parts and components, et cetera? And you don't want to call Geek Squad every time for this. So
No, no, yeah.
So we've worked out with the vendors though, our OEMs like Dell and Penguin and Supermicro and all these warranties to cover the hardware side of the business. And then we can do like patches. Like we're in charge of the software side of the business, so we can upgrade and do all those things. Price of chips we've thought about. Like so, the price of chips come out. Maybe some prices, the market conditions degrade those chips. Some rise and fall. With the industrial site locations, we actually tell them to sort of build small to begin with so that they can build into the capacity so they can adapt with the layers of chips that are coming out. So the next layer of chips that are coming out that Jensen announced are the Vero Rubins, and those should be out in the next 6 months. So there will be a surge in demand for those, and maybe the prices fall a little bit. But it's still a huge question mark on the usefulness of these chips because, like, what we've seen in the power crunch so far is that A100s, which are relatively old, even A100s, started going up again because people need them. They're scarce. And also, they've built a software environment around those chips so that they continually need to use them. So actually, Jensen's running into this thing where we thought every cycle, all these other chips would just go down and the new chip would go up. And we're like, oh my God. But then he's also killing his own business margins by having those drops. So, but actually, the market's responding in a much different way than we all kind of thought. So forecasting chip costs are interesting. There's actually, I think Larry Fink just announced like he's buying so much compute that he needs to figure out a futures market to hedge his compute prices. There is a company that I met called the Compute Exchange. Two guys at a Stanford University. They made the Compute Exchange, but it's not quite a futures market yet. It's an options market, but it feels like it's mostly for big hedgers like a hyperscaler. But what we want ultimately, I guess what the market would want would be this ability to buy a futures contract or a forward on my 5090 that I bought from Dell. But maybe we get there. I don't know. Uh, but I swear I think we are on the right track. I think figuring out this distributed power play is inevitable anyways because I think the grid is at its peak, and because no one is working on this, it really carves out a lane for our company to work towards. And if all we do is get the ball rolling, like Friendster before Facebook, then I think we've sort of won into society. But, part of me is like, I don't know, I'm 45. I'm not that old, but you start building companies that I want to have meaning. It's not just about making the money, it's about solving a real world problem
This
for,
is a real world problem, that's
yeah,
for sure.
and solving it for people at like a decent level. Like, all these homeowners, like we're going to help out down in Tennessee, low income county. There's a school, they have solar on the roof. It's a Republican district, by the way. It's like, whatever. Working with a history teacher to put solar, utilize solar, put an edge scale machine. The next generation of kids can like start really understanding energy, start building, things from it. I think, and that's an important point. I think our generation has lost our understanding of energy. Like if I ask my grandparents how many kilowatt hours of electricity they used last month, it's like, 100 years ago, we would know that we'd need like 2 cords of wood to get through the next 3 months. We had an attachment to our energy. But since the grid came out, we've kind of disconnected. And
Yeah,
so
it's just always there. Yeah,
the only way we know how energy works is by charging our phone and being like, it's going to run out in 8 hours.
yeah,
Whatever. We
yeah.
have that attachment. But so by bringing in this, like all of a sudden people will start realizing, oh, energy can be an asset. Wait, I can make money out of my solar roof. Like, how else can I can make it through compute, but what else can I do? And so training the next generation of kids all throughout the country, low income, wherever it is, there's hope that you could actually generate energy as an asset class, and now there's like sort of all this unlocked power that comes from it, a lot of income that can come from it. So, anyways,
That might be the universal income play, right? Which there's all kinds of issues around that, but putting up a couple solar panels, if you've got a big field and aside from the how ugly that is, in Utah somewhere and put a bunch of your boxes in it and instead of having hay for the horses. I don't know.
yeah. Well, I get annoyed too. I mean, I worked for the longest time, actually, even with a wind company I invested into, and trying to make this stuff look pleasant.
Yeah, it's hard.
But anyways, so our innovation, it's all distributed energy. It doesn't have to just be renewables. So in the future, like I've met with the Trump administration. I went to one of their events down in DC. He created something called the National Energy Dominance Council. I don't know if you know this team, but It consists of like Peter Lake, who was appointed by Governor Abbott to repair the ERCOT grid. So there's guys like him, Jared Egan on it. And, the whole event was about SMRs. And so Trump is cutting a whole bunch of red tape to see this happen fast. Rolls Royce is in it, Westinghouse. There's kind of a race. Although I talked to like KKR and he's like, we haven't invested in anything yet. They're usually 5 years ahead of where they would think something happened. So it might be a ways out. We're not we're not trying to discriminate between, kind of fuel like fuel cells or hydro or, natural gas potentially. Our bigger concern is for the grid. And sort of really making sure we crack that problem and bringing everyone into the energy economy, because it's been, honestly, like, my own opinion, it's kind of stupid, our energy policy swinging
Totally.
back and forth like this. Like, I've learned in Norway, the oil and gas guys can sit right next to the renewable guys and can sit there, like, it doesn't really matter. They're either electrons or photons. No one really cares. It's just powering our society. And so having a better energy policy where it's not political would allow us to actually grow our energy economy so much larger. And if you're going to compete against the Chinese, I think we got to stop the horse race. We got to just say, look, all right, what's the cheapest? Let people build what they need to build. Let's subsidize it all if we have to, if we're going to try and defeat these,
Because
but
that's
nothing
what's
against the
happening over
Chinese.
there. Yeah. Isn't it true that most of the transformers are built in China?
Yeah, a lot of them. Also, HO in Mexico, Siemens,
Yeah.
and, yeah, it's true. Look, we outsourced, but I mean, I don't know if we're naive or whatever, but in the 90s, we totally thought this neo policy was like a good idea of neo trade and neoliberalism. And it was a good idea if our friends over there across the seas respected it, but they stole a bunch of IP. They abused the, trust.
Their way of life.
It is their way
Yeah.
of life. Yeah.
Yeah. It's a completely different.
And by the way, I totally respect it. Like, that's being a capitalist to the T, right? And we shouldn't have been so naive to think, oh yeah, our partners are just going to do. But, that's on us. But I think now that we know it, of course, everyone kind of knows that the cat's out of the bag. It's like, how do we then build the next generation where it's not so dependent on that supply chain? And I think it starts with an energy first policy. How do we? Because, and innovate the crap out of energy and energy systems and new grid systems. And
Everything comes from there.
you know
It's
what?
just like,
We got to leverage American innovation. Like, the one thing I know, AI is kind of diminishing or saying human capital, whatever. No, actually, in talking to Jensen, he was saying we need butts in seats, meaning the computer needs someone to prompt it. You need a lot of smart people asking the right questions in
and
order to
then,
get
and then,
results.
and then making sure there's quality control on the result, which is can only be done by humans as far as I can tell.
Oh,
So
totally.
we're involved in a 6-part series that Jensen was interviewed for hours and participated in, all about AI. And we're rolling out the uh, episode in the UN has a AI division, and we're doing something in Switzerland in a couple months.
Pretty cool.
And yeah, Jensen really opened up his door and let us interview him. I say us, a friend of mine, and he's a filmmaker. That's his business. And so he's got this 6-part series talking about, rather than it being doom and gloom, all the good stuff that could come from AI, right? So we'll see how that rolls out in a couple months. I've seen the clips and some of the previews, so it's really interesting. It's well done. He's a really good
He's an
filmmaker, so
awesome
that's part
speaker
of it.
too,
Yeah,
Jensen.
he's a great guy. So today they announced that uh, I think Apple just threw in with Intel to build a new chip,
Okay.
something like that. So, things are happening, right? It doesn't mean that it's going to be better than anybody else. It's just going to be chip capacity, I think. And then what do you think? Like, what for the people that are listening? I'm sure many of them have solar, uh, which is probably the most popular thing to have on your home, right? You're not doing most anything else. You're not doing wind necessarily. Does it make sense for them to ring you up and say, let's put a box here?
Yeah, 100%. Yeah, we're open. I mean, we'll be launching a new website, but we're getting better at it too. We're streamlining the customer experience and, trying to be like a real company. We've had to do a lot of things. We had to marry an energy market, which is complicated, like reduce it down to its easiest parts, and then an AI world and reduce it to its simplest parts to make a device that's easy enough for someone to just get in a box and install. So there's a lot of thinking that's been going on and continues to go on to evolve this product over time. You will get an app that basically tells you, okay, this is how much energy you have. Here's how much you can store it, and here's how much you can sell it for. So it starts gamifying, your energy. And so it does start. We have games we're building, and it's like how you can build next to your neighbor, and sort of how do they build and add more capacity at their home location. That's why we're paying them 80%, because it's the hope that they actually put more solar, they add batteries, and they build this resilience. They're actually building Grid 2.0 for us
Mhm.
because they're making more money out of it.
Yeah.
And
And
that's,
so
that's the idea.
do they need to do anything like they've already got the solar configuration, they plug in the box, did they need to have an electrician come out and do anything?
Nope, nope, just
Yeah,
plugs into the wall. Yeah, for
yeah.
homes, it's really simple. For like your industrial guys, we actually have to run a sizing and understand the site location, understand its fiber, understand a few other things, and then we can put in orders, competitive bids, and then ship it. That's a little bit more involved, but whatever. It's not that
Yeah,
complicated.
yeah. Not that complicated, yeah.
But then,
Super.
the other thing, just to say this too, like in terms of just to dovetail on what you're saying about Jensen and the UN and how you can use AI. So we've got one customer that's an energy host down in Pennsylvania. They built 700 kilowatts of power on their chicken farm. They do not need 700 kilowatts for their chicken farm. That's way too much for the chickens. And so we're building a server in a container. But what he does run is drone caterpillars on a site location. So
Uh,
what we can actually do then is use Lectra, use his machine to automate parts of his farm. And so what AI can ultimately do, so our starting point with AI is to understanding energy requirements for how much power do I need at this location? And then the AI can actually run a system. Like when you think about robotics, Elon's obviously building this robot to come into your house like the Jetsons. But a robot, it doesn't really need to look like a human. A robot could be the brain is here, and I have an arm as a lawnmower, an arm as a car. That ecosystem could be a lot of different things. So our starting point is understand the energy requirements and start building that capacity. And then how much AI do I need at my location? And can I build businesses? Can I build my farms better? Can I make my IoT systems work better in my bank, in my, whatever? And that's how you localize AI instead of trying to get it from ChatGPT top down, where these guys are making hand over fist and there's like five guys who are going to run the planet. Screw that. People should be able to have their own energy, have their own AI and data at their own location. They should be able to monetize not only their energy, but their data too. And so that's been a big push for Lectra. It's really important to us is to make sure that homeowners actually have the rights. These are the property rights. These are something that we should control, not give up because, oh, China's going to come over the mountains and kill us all. No, I think we are an advanced civilization because since 1620 with Adam Smith, we started coming up with property rights. Those still matter. And for energy rights as property and AI, if we create a system that we're at the center, where people are at the center, then AI will really thrive because then it'll be more competitive. You'll have more entrepreneurs and you'll feed a system instead of a top down thing. So that's my Thomas Jefferson for the day.
yeah, yeah, no, that's absolutely right. Totally agree with you, and it's important to say that because it's kinda like having mineral rights. They're yours, right? And you can monetize them if you want. So, what about the idea to me, to oversimplify it, what you've done is, a decentralized, but more to me, the real edge is that you don't need to be selling it back onto the grid, you just put it into your cloud and you're done.
That's it. Yeah,
Yeah,
that's it. So it's just a different
yeah,
off taker. Yeah.
yeah.
Yeah, it's crazy. I mean, we've been so trained to the grid that it takes people like when I talk to people about Lectra, they get it. And then I'm just like, all right, wait for it.
You immediately go back to the grid, right?
Yeah, yeah, yeah. But then like weeks later, they'll come back and be like, wait a second. So you don't have to sell to the grid? No. Like it takes a while to decouple from the grid mentally. And then once you get it, your mind is open and you're like, oh my God, I could do so much more with my energy. Why was I not doing that before? Well, because a monopoly tells you that you can't. And then that's powerful. And then there was no real competitive alternative, I suppose, for the longest time. I mean, we built around this grid and there was no problems with it and whatever. So
So I don't know if this is a real business model, but someone came to me and said, look, rather than building these big data centers as an alternative method to make money and also power things that we need, the big power companies on location, they have excess power all the time because they have to deliver 95% all the time, right?
right.
And so they're sitting on excess power regularly that just gets dissipated or whatever the proper term is, right? What about putting one of your edges right next to there, taking their excess power when they don't need it, and then pushing it up to your cloud?
We could do that. Yeah, we could do it. And yeah, there's so many businesses like that that they just have they've overbuilt the power requirements for something. Like, we know some plastics manufacturers, similar case. Yeah, there's a lot of stranded energy in a lot of locations, and it's perfect to build towards that. And then our energy LLM also then tell it to like build additional power sources if they have fiber. We can start working with batteries at the site location. It'll start forecasting what it needs to do. It can build a microgrid. It can build like share it with their neighbors, and that sort of thing. Yeah. So, and then ultimately building a decentralized architecture is kind of interesting because we don't know exactly how it's going to go. So I've actually started working on a video game to help us game out how people would actually behave. Almost like a digital twin before we build out the sort
Yeah.
of decentralized grid.
How cool is that?
Yeah.
Totally makes sense.
We'll come out with that soon, but I like to
Scenario
my stuff.
planning.
What's that?
Yeah. Scenario planning.
Yeah, exactly.
I like it. Well, Carl, thanks for doing this. Really interesting and bleeding edge stuff, right?
But no, thank you for having me. I mean, it's thank you for putting me on the platform. I'm just trying to get sort of the word out of how this works, and Lecture, we're a platform, we're open to doing business. We hope we're trying to push the market in the right way. I think if we can get people to start thinking about all these different ways they can use their energy, then we've done our job. So yeah, no, I appreciate it.
I have one, being the capitalist that I am, question. So if I went to all my neighbors and said Sun Homes or whoever you have to deal with is going to put a solar roof, or I go to Tesla and they say, I'm going to finance putting it on all your roofs. I'm going to put an edge compute in the middle of the neighborhood, and you don't have to worry about financing it. We'll share the revenue with you, and you guys will be power independent plus make money. Is that something that's doable?
Oh yeah, I mean we're partners with solar distributors all over the country, so it's not just Sunrun. Yeah, a lot of solar companies have come out of the woodworks. The solar bro.
Does the math work?
Yeah, what we do is we just cut them in for a slice. Like a distributor, we give them some of the revenue. Again, it's an 80-20 split. So we give them some of the ongoing revenue. And what I'm trying to do with solar distributors is disrupt their model too, because this whole 30% upfront commission and you know, solar owners get screwed. I always thought it was going to be like a bunch of hippies being like, hey, man, it's you go green. It's not. It's more like a mortgage broker. So
Yeah.
you 20-year crappy lease to get $50 off your bill. Sales guy takes 30% upfront, and then your wife is yelling at you because they look stupid on the top of your house. It's like lose on all levels. So I'd like to change that around and actually incentivize the sales guy to not charge as much upfront, bring the upfront cost way down. Because if they're going to get a trailing commission on the revenues, that's a totally different model. And then they can sell that homeowner more product. They can say, oh, actually, let's build out the battery a little bit more. We'll get more juice. You can make more money and be more of like an energy advisor, almost like a financial advisor, but an energy advisor to homeowners and help them understand what they can do over time. But yeah, you could call them up. There's a lot of solar distributors have started hearing about us, but we're actually really going to start like with our bigger marketing push. We've been kind of not in stealth mode, but we got the patents. We were slowly building this over time, and now it's just we have to answer the timing of the market. Now we're just like,
Yep.
let's get the money and let's go, because
Yeah.
this is the time.
Totally makes sense.
Yeah,
All right. Well, thanks for entertaining that question. And again, thanks for doing this, Carl. Really appreciate it.
yeah. Just reach out to me anytime if any of your family offices have questions, and just want to understand it better. I'm always open to a call or whatever, or an instructional, whatever. I just do this all day long,
Yeah.
and I love it. So
Yeah. Appreciate it.
cool.
Okay. Thanks very
Excellent.
much. And thanks everybody for being here.
Thanks
See
so
you next
much.
time.
Thanks.